When you're saying valuations are looking reasonable, I'm assuming that you are looking at historical benchmarks?
Yes, if you look at, in terms of PE multiples, typically I think 1 to 2 years forward. So in 3 months' time, we'll all start focusing on fiscal 25. So I think based on fiscal 25, markets are trading between 16, 17 times, which is reasonable, which is not cheap, but it is not unreasonable either. I would say things are just about okay.
Is it a good idea to look at historical benchmark, because history and these conditions, when these P multiples were there in the past, the conditions were very different. Liquidity, underlying growth of the economy, global interest rates. So is it a good idea to look at historical benchmarks and talk about valuations?
So when I look at historical benchmarks, I look at typically a 15-year average, because that does cover 1.5, 2 cycles. And if you look at 15-year averages, I think we are slightly above that. Our growth rate should improve hopefully as we go over the next few years. I think India is acquiring more and more prominence, visibility globally. It's becoming a large, fast-growing economy. Geopolitically, I think we are in a good situation. We are a good boy in the world. So I think given all of that, the size, the growth, I think a 16, 17 P, to my mind, appears to be reasonable. And it is also in line with slightly longer term averages, maybe slightly higher.
I'd like to draw your attention to what's happening to flows. For 2022, foreign institutional investors were big sellers. For the calendar year also, they've been net sellers. Now that we are the official big boy or the good boy in the world, what are the chances that this year flows could reverse, and in that the market P multiples actually could surprise us on the upside?
So Nikunj, that's about the only uncertainty that one is, if one is forced to mention. I think that continues to be a risk. But let us look at it the other way. When foreigners sold almost 40 billion worth of stock between, I think, September 21 to June 22, the markets held pretty firm. So I think the local flow of savings towards equities has changed decisively, and people like you have played an important role in that. So I think the vulnerability of the markets, at least from a medium-term perspective, to foreign flows would be far less, I feel. But that possibility can never be denied completely, because globally, inflation thus far has not come down as much as markets would have hoped, and some people talk of a recession. I don't think that impacts the economy in India, but it could impact the markets short term. But I would look upon that, should a correction happen induced by foreign flows, I would look upon that as an opportunity to buy an otherwise a very strong fundamental story.